It's not a glitch. 2026 is the year health insurance hits its breaking point. The tax credits that helped keep health insurance prices low through COVID are ending, and nationwide prices are increasing by 30%. So what's changing in 2026 that's causing some people's health insurance premiums to double or even triple in price?
Americans are bracing for their insurance costs to rise.
People could have their healthcare costs doubled.
Subsidies are set to expire at the end of the year. On average, that could mean their monthly premiums more than double.
So let's start here. Open enrollment is the one window of time where you can sign up for health insurance through healthcare.gov. This year, the window is from November 1st through January 15th. The COVID-era tax credits that helped keep insurance prices low are ending December 31st of this year, and the new rates on healthcare.gov already reflect these changes. So next year, families will be paying the full inflated cost of health insurance, or they'll be looking for other options outside of healthcare.gov. On top of that, prices are also rising. On average, we're seeing 30% price increases nationwide, higher in some areas. In other words, this is the year to choose your health insurance carefully, because once open enrollment ends, you will be stuck until the following year. So let's take a look at 2026 plans. My clients use Healthshare, which is a private portal linked to the health insurance marketplace. Inside Healthshare, you can search real ACA plans by zip code, make sure your prescriptions and your doctors are covered, see if you qualify for any remaining subsidies, and easily compare plans and companies. This is how we look at your ACA options side by side, and it's usually where people see the problem. The numbers just don't make sense anymore. It's becoming clear the Affordable Care Act is officially turning into the Unaffordable Care Act. If ACA plans don't make sense for your family this year, there are other options worth exploring. Option number one are short-term medical plans. These are PPO health insurance plans that are targeted towards healthy individuals because they do not cover pre-existing conditions. If you're healthy and don't go to the doctor often, these plans often deliver a better overall value than traditional marketplace plans. Now, your second alternative to healthcare.gov plans are health sharing plans. These are community-based cost-sharing programs that share medical expenses among the community after your deductible. Now, these are not insurance plans, but they have become a proven alternative for health coverage outside of the ACA. That being said, I want to be clear, if you take an expensive medication or if you have a serious pre-existing condition, these plans will not be a good fit for you. In that case, you need to stay on a major ACA plan that is the only option you have that guarantees coverage for pre-existing conditions. When you book a one-on-one consultation, we will go through your situation together. My team will show you every plan and alternative available in your zip code, go over the trade-offs, and help you decide which option truly fits your needs, your health, your family, and your budget. Having health insurance is one thing. Having a plan that actually pays when life happens, now that's a different story. Your major medical plan covers the big stuff, the hospital stays, the surgeries, the six-figure bills. Once you hit your deductible and out-of-pocket max, major medical pays at 100%. But health insurance does not cover everything. Denied claims, experimental treatment, out-of-network care, the cost of a caregiver, those bills still land on you. And that is why the Total Protection Plan exists. The Total Protection Plan builds on your major medical foundation with two key layers: accident coverage and living benefits. Here's how your accident plan works. Whenever you go to the doctor, you're gonna be there for one of three reasons. You're gonna be there for your preventative care, for a sickness, or for an injury. Whenever it's coded as an injury, you pay nothing. An ER visit alone can run anywhere from $2,000 to $8,000. Your accident plan pays the entire bill for you. No deductible, no problem. The second layer is your living benefits plan, which is basically cash you get if you were diagnosed with a major illness. Upon diagnosis, this plan pays up to $1 million directly to you. You can use the money however you want. Medical treatment, paying for your mortgage, travel, keeping your business running. It is your money your choice. Last 4th of July, one of my clients broke her arm jumping into a swimming pool. Her major medical plan paid for the surgery and her accident coverage eliminated her deductible. But after the surgery, her doctors were like, it doesn't make sense that your arm broke just from the impact of the water. Like, that shouldn't happen. So her doctors ran tests. And later that day, my client, Miss Patti, was diagnosed with stage 4 breast cancer that had metastasized to her bones, which was a crazy shock, but that is where her living benefits plan stepped in. Her policy paid $1 million directly to her. It's been over 1.5 years and Miss Patti is still fighting. And because of her living benefits plan, she's been able to focus on recovery, focus on her treatment, and spending time with her family without worrying about medical bills. On the worst day of your life, the last thing you should be worrying about is how to pay for it. Health insurance sucks. We help you find the health insurance that sucks the least for you. If you're ready to look at your options, schedule a one-on-one consultation. My team will help you look at every plan available in your area, review your prescriptions and doctors, and make sure you have a total protection plan. That way you are covered no matter what. Click the link below to fill out the form and we will text you to schedule your one-on-one appointment. If you have any questions, leave them in the comments below and I'll see you next time.